Real Men of Real Estate with Steve Matley, construction manager and real estate developer, business owner, and educator.
Did you know that right now there's 22,000 units deficit?
Tunde Ogunwole, real estate development professional, Naval Academy grad, and veteran with a deep understanding of the public sector process.
All of us want to live in thriving communities.
Brian Fox, real estate expert and investor, dedicated to helping hundreds of clients make money in real estate every year.
There's so much housing going in.
The builders are begging for more land.
Future company can come in, lease up space to employ those people who are living in the homes.
We have to put the housing in place.
That we either have to have houses,
They want to make sure that there's a strong employment.
logistics centers, things like information hubs. We are a shipping economy now. There's economies all over the country where their prices are doubling and tripling.
Hi, welcome to the Real Men of Real Estate. I'm Tunde Ogunwole. I'm excited to get going again. I'm pleased to reintroduce you to Steve Matley, the president and CEO of Coast to Coast Equity, and my good friend and partner, Brian Fox of Fox Realty Group. Today, we're going to focus on how to find opportunities in land development. You've been interested, you're cooped up at home, and you're interested in learning a little bit more about opportunities. Today, we're really going to have a specialist who syndicates a lot of deals walk through that. Steve, take it away.
Thank you, Tunde. I appreciate it. Brian, good to see you always. Today, we're going to talk a little about opportunities in the land side. And I know a lot of people are nervous and a little bit trepidatious right now about investments, mostly because there's uncertainty. And we see companies, the stock market has gone down and then went up and went down and went back up again. We see companies that have laid people off or put people on furlough. And so there's a lot of uncertainty. But more millionaires are made in recessions than in booms. And the reason is because there's opportunities that present themselves uniquely in these certain times. So the land side that we're in, we look at it as more or less, it's less subject to the volatility of what's going on. The stock market is like a unruly child. It reacts emotionally to everything that comes up, to news things, to international events, to weather issues, to virus outbreaks. It reacts emotionally to everything. And so it tends to go up and down a lot. Now, in the long term, there is definitely a long-term, fairly stable trend when you go over decades of time. But in the interim, it's very, very volatile. Real estate is less liquid, much less liquid, and therefore it doesn't react as quickly. It does have its ups and downs, but it tends to be more slow and more measured because you can't just go dump all your real estate tomorrow by calling your broker. Land is not the most liquid thing out there. And that actually gives a little more stability to it. So we're in a unique side of it, which is the land side. And I'm going to share a file with you here. What are you going to do with your money right now? You've got money sitting in stocks, it's in retirement accounts, it's in HSAs, it's in different, whatever you've got out there. There's money in different things, and some of you have money in real estate. And a lot of people don't know what to do with it. Do they keep what they have? Do they sell it? Do they just hold on to it? And there's a desire right now for people to kind of hoard money, almost like it was as valuable as toilet paper. No, I'm joking about that. But people want to hoard money a little bit because you want to have savings in an unstable time. You want to have some money. And I would encourage people to have some liquid assets available. But look ahead and figure how long is this really going to last? Are we looking at 2 months, 6 months? Honestly, if this thing's still going on 9 months to a year, we got a lot bigger problems than what your investment portfolio looks like, because that means we've got a cataclysmic type of a virus outbreak here. So we're looking at this as probably weeks to a couple of months here mostly, and then we start getting back to normal, which will take a while to recover. So your money still needs to be working, and if you wait until everything's back to normal, you'll see everything stabilize and you'll miss the opportunities at things at low prices. So look at what you're doing with your money. And I know it's tempting to want to just hold on to it, but one, that's not a way to get your money to grow. And two, that's not a comfortable way to sleep. So I'm thinking there's other things you can do with your money right now. The stock market, of course, we see is very, very volatile. This is kind of how I look at the stock market, going up and down. And, it will go down very sharply probably again at some point, and then come back up again. I actually have a lot of confidence in the market recovering again because we went into this with a fairly strong economy, but it's quite the wild ride. And if you don't have the stomach for that, then there's other ways to look. Although you want to be very careful before you make any moves one way or the other. Do your research. So as anything, when you want to invest, and we did a previous episode where Tunde talked about opportunities in the industrial market, and Brian's going to talk later about things in the residential retail market. There's a lot of opportunities out there, but with any of them, always do your work. And Tunde really emphasized that in our last episode. Do your homework and do your research at all times, and understand that every investment has risk. Otherwise, you wouldn't be able to make any money on it. I chuckle at investors that talk to me sometimes. They say, now, what's the guarantee in your projects? I say the guarantee is there's no guarantees because I don't control the universe. I wish I did. In fact, when I first bought my universal remote, I thought it would remotely control the universe, but it doesn't. So I was very disappointed. But I don't control that. Therefore, there's always going to be some risk. And there are some guaranteed investments out there. You can get those. Those are called T-bills and CDs. You get those at your bank, and they pay out less than the rate of inflation. So I don't recommend them. But do your homework before you get into anything. So I want to share a little about what we do. Now, this is just land, just plain old land. It's not built on. This is actually one of our actual projects that we have right now. You'll see off in the distance some houses. Those are houses sitting on a project we did about 15 years ago, already built out. Those were happening before there was a downturn. And so this piece of land we've acquired, and we've actually designed a project to back up to it. The interesting thing about what we do is when we have a slowdown like this, we're not reliant on material suppliers. We're not reliant upon the mobility of labor, tools, equipment. We're not reliant on people sitting in the same room talking closely together, where we could not do that right now. All of our consultants can work remotely. They're all able to do that. We hire civil engineers, soils engineers, environmental engineers, those kind of people. A soils engineer can go out and do what they have to do on one of our sites and not be anywhere near anybody. So they aren't going to be, in any way violating any of the social distancing rules right now. And of course, we only do that once. So most of those are already done on all our projects we have right now. So we don't even need that right now. The one vulnerability our projects have is when we get very close to approval, it requires a planning commission and or city council review, which are, of course, public hearings. Those could be delayed because it's very hard to get a public hearing right now when you can't have more than one person or two people in a room together. So what I look at is if this goes any longer than a couple of months, you will see almost every agency out there finding ways to have public hearings virtually because they can't stop their municipality from managing itself. And they cannot meet in private because that's a violation of the Brown Act. They have to meet publicly. So I see that as a very temporary, that the most we might lose is 30 to 60 days on a planning commission calendar for a project that's getting close to moving to planning commission. But our projects are longer term. And the truth is most of our projects are 18 to 24 months. And because of that, short-term issues don't affect them so much. So this is what it looks like when we buy it. We buy the land, it looks like this. And then I'm gonna show you what it looks like when we're done. It looks like this. Because everything we did was legal, Steve. Everything we did, we didn't do anything. We didn't build anything. We didn't engineer anything. We didn't do anything. All we did was create a map and get approvals to change it. So why in the world would there be more value? Well, because we buy raw or underused land. We perform the entitlement process. Entitlement is changing from what it is to what it could be, a highest and best use. In our case, it's taking agricultural land you can have 2, 3, 4 homes on over 40 to 50 acres and turning it into land that you can do 200 homes on. So if you think, for the people that like investing in, say, fix and flips, that's pretty common. People, if they haven't done it, they've watched HGTV, which for God's sakes, don't follow what they do, but you kind of get the gist of what they do. Think about if you bought a 2-bedroom, 1-bath fixer-upper, and when you were done doing the fix, you had a 100-unit condo building. This is the scale of what we're doing on these properties, which is where the value comes in. So we create a more productive use out of it. Now, I know Tunde gets involved in this on his side on the industrial and the commercial sector, doing the same thing. You buy a piece of land and get it zoned for a commercial or industrial use, which means it's now sold by the square foot instead of by the acre when they purchased it. So there's a lot of value there too. So once we entitle, we will sell it to a buyer. In our case, our customers are builders and developers. If it's commercial land, it could be a company like Tunde works with. If it's residential, it's going to be normally public home builders. All the big names you ever heard of that are publicly traded out there, we have sold to all those companies. D.R. Horton, KB Home, Meritage, Lorna, we've sold to all of them in the past at some time in different areas. So once we entitle, we sell it to them. And this is a project you can do by yourself if you have a lot of money. So if you had that mattress full of cash and all those were $1,000 bills, you could do this on your own. Most people don't have that, so we syndicate. And we mentioned syndication in the last episode. Syndication is just where we pool people's money together so that a bunch of people with $15,000 to $25,000 can all put their money together, and together they'll have $500,000 and go do a project like this. And that's how that works. And so we do it corporately. Excuse the spelling there, but I was not an English major. I was never even an Italian private, so I have no Italy spell. Several different project structures can be employed. Now we use syndicated LLCs because those work. And honestly, one reason we do those is we can make these available to people that normally will have no access to these type of projects. These are the type of projects that usually are the realm of the big developers, the big time wealthy developers. We'd like to make them available to just normal people that want to get involved and see the kind of returns that are better than the 8 to 10 to 12% returns you get in traditional real estate. So this is what we bought. So that land I showed you that was just empty land, if we looked at it on a map over at the county recorder's office, this is what we would see here. The assessor's office shows the assessor's parcels, and you see there's 3 parcels. The little tiny parcel is not a part. That was the original farmhouse. So the other 3 parcels creates 52 acres, and we turn it into this. And when we're done, it's got a lot more value. So that's what we've sold. We've sold the land that doesn't look any different, but we've sold instead of 3 individual parcels, each of which can have 1 to 2 homes on it, we have this tract full of homes that can be built, along with plans for streets and curbs and parks and school sites and detention basins and whatever else needs to be included. So that's really what we do. So I will stop sharing that there, but that is the gist of what we do. And the availability of opportunity right now has to do with anybody that has the money that they want to move out of the volatility of the stock market, or take out of a savings account where it's not making any money, or pull it out of the mattress or the safe at home or whatever, and put it to work for them in projects that really are not overly subject to the volatility of the short-term changes. It's a long-term. So speaking of long-term, the question is, great, so we get to decide where's the long-term going because we think the economy may be tanking. Well, remember, a very strong economy coming in, a lot of money out there in the economy. We came from an historic low unemployment rate. Now, obviously that's jumped in the near term, but that'll probably go back up as we come back out of this, because all those businesses that shut are going to have to reopen again. And though most of them will. Some may not weather the storm, but most of them will, especially the larger ones. And so you'll see most of those people going back to work again. Also, I look at all these people that live in the urban centers, and they live in the urban centers because that has been where our society has been moving people over the last 20, 30 years. As a lot of it's because as people are empty nesters or whatever, they get older, they don't want a big house. They want to be closer to town. They don't want to commute so much anymore. Gas prices were a little high. And there's also the desire not to develop undeveloped land in a lot of circles because of environmental issues. And now we find out that putting everybody in one place together is how we spread a virus very fast. And I think you'll see a lot of people that think twice about that. And, I think I kind of want my own property and my own 4 walls in case something like this happens again. And we have people that have to work at home that never did before. And now you've got 2 adults and 2 or 3 kids that are all working and going to school at home on a computer in limited space, kind of trying to talk over each other, not getting each other's way. And you got one on the dining room table and one in the bedroom, one in the living room, and someone setting up in the bathroom too. It gets a little bit crowded there. So I think people may be out looking for more homes. And we already had a housing shortage. We already had a affordability issue, and that's not changing. That didn't go away. So I'll leave that out there and open it to any questions you guys may have.
Well, Steve, I think you did a great job of just talking about what people can do with their money if they're going to put their money to work to make investments so that they can come through this season, however long it is. You're offering that opportunity through syndication at Coast to Coast. And you really talked about the fact that it's not as subject to the volatility as the market is, or the market, we say the market, but we're talking about the stock market in most people's cases. For those people who are really curious to know about, okay, I've got the 10, 15, $25,000 or so, how do I find someone like you? Do you want to describe what it takes to find you? Is there a qualification
Yes.
process?
Yeah, actually, it's actually fairly easy. And of course, we're just in one area here. We have projects in Southern California, in Texas, and in Florida. There's all over the country, there's people doing this stuff. This is not a secret at all. It's nothing, we're not doing anything proprietary. There are groups of real estate investors that get together on a regular basis. Now, right now, they're meeting virtually because they can't meet in one place just like everybody else, but their meetings are still going on. I've been participating in some of them. Here in San Diego County, we have at least 6 of them that I know of. And they're real estate investor groups. So you can look those up, Google those, find out. So they go by REIs, Real Estate Investor Associations, REIAs, REIs, Real Estate Investor Clubs. Just look those up and Google them in your area, and you will find that there are clubs in almost every area across the country, every town, every county, every city across the country. There's probably multiple clubs, and some specialize in certain things. We have some here that specialize specifically in people that invest through IRAs and health savings accounts. So they are people that are coming out of retirement accounts to invest in things. Others are people that really specialize in the fix and flip type stuff. So there's a lot of opportunity out there, and that's where you want to go meet. You know, if you want to catch a cold, go hang around people with a cold. If you want to catch information on how to invest in real estate, go hang out with people that do that. And right now, hang out with them virtually because it's available. There's webinars, Zoom calls just like this. There's all out there.
Question for you. What is say someone was to invest, what should they expect as a turn time for the investment to pay out?
Well, that's going to depend upon where they're investing. So here we're in California. California is the land of very thick bureaucracy and red tape getting anything done. We have what's known as CEQA, the California Environmental Quality Act. It's not all a bad thing. This is why you don't have somebody able to build a strip club next to the preschool. Those kind of built-in protections are in there in CEQA. It's also why we can't build on an old graveyard or something like that. Okay, so it is important that we have it, but in California it's very arduous. It's a lot of layers to it. And so here, our projects take anywhere from 18 to 24 months, and that's considered lightning fast for California. If we moved closer into the urban areas, you would see that jump to 5 to 7 years, or as you get closer to the coast, you might look at 10 to 12 years for getting approvals on those things. That's not really unusual at all, especially when you get coastal commission involved in those kind of things. Out of state, our projects are much different, 6 months to a year in some cases. We have a big problem in the Texas area of trying to get projects that last long enough that we get long-term capital gains out of them, because it's a lot faster to do things there. So it depends on what part of the country you're in.
Okay, cool. So I was gonna say, speaking of that, what are the returns people should think about when they're doing investment projects like this?
They range all over the lot depending who's doing them and what their structure is. Our structure is a formula that works for us. We've been doing it since around 2000, and it works for, actually my partners have been doing it longer than that, because my partners are both older and wiser than I am. So I try to surround myself with people smarter than me, which really isn't all that difficult, but it makes me look good. So I would say the returns right now for the projects that we're doing are ranging, and you're going to think this is insane, in the high 60s to low 70s annualized. So around 70% annualized returns on projects that last 18 to 24 months. And I know that sounds absolutely astronomical, but the reason is because the kind of projects they are and how we structure them. If we structured projects in a more traditional way, where we do it more like the fix and flip, where you actually buy it and then fix it and then sell it, we'd probably see those returns knocked down to somewhere in the 35 to 40% return.
Still insane.
But yeah, so which is still better than most.
Yeah.
But it's a different realm of the market. You know, this is kind of the professional real estate level of the market. As I say, what developers kind of do. You have to ask yourself, the people that you see out there that are the big, huge developers that are big names, they didn't make their money on 8 to 10% returns, although there's nothing wrong with that for people that have limited resources and they don't want to get it over their head. There's a place for everybody in the market. There's a place for industrial and commercial. There's a place for the fix and flips. There's a place for the buy and holds, the rentals, the duplexes. There's a place for everything in this market, depending upon what your appetite is for return and for risk.
Well, thanks so much, Steve. I want to kind of close on that note because I think for anybody who's interested, they can obviously find you at Coast to Coast Equities. And for those of you who heard those high returns as low as 35 to 40% when they're marked down, but the deals that you're working on are 60s, 70s. And I've seen some of your performers that are higher than that, closer to triple digits. I think
If all the stars line up, it's a heyday. Yes.
So I think it's important for people to hear that as they're looking at opportunities. Thank you, Steve, for walking people through the land development. As always, I love having you, Brian, highlight those questions that people are always thinking about. How long does it take? How much money can you make? And again, I'm Tunde Ogunwole. You're watching The Real Men of Real Estate. We invite you to find us on Facebook. We have a Facebook page, Real Men of Real Estate. Please like our content at Facebook. If you like us on Facebook, you could also join us on YouTube. There's multiple platforms. YouTube, we have our own channel. We ask you to subscribe on YouTube. We have a number of episodes that have been broadcast, and if you want to get access to those episodes, you can not only find us on Facebook and YouTube, but you can find us on the Real Men of Real Estate website, which we have, as well as Roku under the Building Foundations. Again, I'm Tunde Ogunwole, signing off. Thank you for watching the Real Men of Real Estate.